Reliance over the course of next year.
Uh, uh, Sandeep, I just want to talk about a couple of other sectors and what do you make of that? Right on top is really private sector banks, because that's one space which has kept the market in check over the last couple of months. We had IndusInd Bank's numbers on Friday, and the market actually reacted a bit negatively to a marginal uptick in NPAs. Do you think that was a bit of an overreaction, and what's your call in some of these private sector banks now?
I think we have, suffice to say, we have always liked IndusInd Bank, the way the management runs its business. There will be some asset stress creeping across all banks, some to a greater degree and some to a lesser degree, because because we are all currently have been in a very difficult environment for the last 18 to 24 months. So to say that no stress should be shown up in any of the bank numbers would be expecting too much. So I think IndusInd as such will continue to deliver earnings growth superior to not only the market but also the banking sector. And we continue to like the stock. As far as the entire private banking sector space is concerned, the real issue here is that the valuation expansion, valuation multiples that these trade at are significantly higher than anywhere in the world, I would say. So clearly there is now not room for valuation expansion or multiples to re-rate further, and it is going to therefore be a revival in the entire sentiment, falling down of interest rates maybe after April, May, and the pickup of loan growth in the second half of the year. That is what will drive the entire private banking space. So I think there's probably a good 6-month period until June when these businesses will mostly be range bound.
Okay. Just wanted to get your thoughts in on how to approach the entire political trigger now, Sandeep, because from August up until the year end, the hope was that a stable government would come into power, and the markets rallied in anticipation of that. But now the texture is changing a bit. There's expectation of a fractured government, third front, etc. How much do you think that could sort of hinder the rally in this market?
Well, it's no one has a crystal ball. None of the cephalologists would have predicted the kind of outcome we saw. That 3 states go to the BJP and the 1 state go to AAP, and we have a chief minister candidate supported by the Congress. So clearly, even if on 8th of December someone had put forth this kind of a scenario, most people would have laughed the person off. So it's impossible to predict the eventual outcome. But to answer your question, until we see a stability and in terms of policy making, until we see someone who can take charge of policy making and drive the entire process of decision making, the market will not be comfortable. So I'm not saying that this will happen or that will happen, but that's clearly been in a situation now for the last 3 years that we have been expecting much stronger decision making, which has unfortunately not come through. So we need to, now the market needs to see that happen.
So Sandeep, leave us with your idea for this year in terms of where the index could be in the first half and in the second half. Do you think we are set for a range-bound performance in the first half and then a move in second half, or do you think we can have a breakout in the first half itself?
I think it's really asking for too much, because no one knows what the political outcome will be. I'm hopeful that we will get a stable, strong government. If that happens, that probably the indices trade up in May, June, and that's what my base case could be. That we see a stable government and the voters vote effectively and intelligently. The voters have voted intelligently even in the last elections, which have just gone by. So clearly, I would expect that to happen. And therefore, I think the market can trend up in May, June. But it's clearly dependent upon what political outcomes are eventually materialized.
Well, I think this market is listening to you, Sandeep, because as you speak, the market is moving higher. In fact, this is the highest point of trade, 300 points up on the Sensex, and the Nifty is up almost 85 odd points. So inching closer to a 1.5% rally now on the Nifty itself, and lots of key gainers. So I'm going to talk about the top gainer on the index. Apart from Infosys, Sandeep, there is Tata Motors, which is up 3%. And we've seen some solid JLR numbers, and there are expectations that 2014 will be another blockbuster year for Tata Motors. For someone who's not been able to participate in this rally, do you think that there could be scope for more?
JLR is Tata Motors, driven by JLR, is an export story. Just to put it in two lines, Jaguar Land Rover is a subscale international car and SUV business. It does not play in the league in which the German or the Japanese large players operate. Its model range is not fleshed out. Just to give an example, the smallest executive sedan, which is the 3 Series and the C-Class, Jaguar does not play in that segment. Jaguar also doesn't play in the SUV segment, though Land Rover, of course, is a leader in premium SUVs. So clearly, what we need is both Jaguar and Land Rover to flesh out the entire model range at different price points. I think in the next 2 to 3 years, this is going to happen. In terms of design, in terms of technology, we are seeing huge advancements being made in the models which have been put through by these companies, which is attracting good volume growth, and the marquee and the brand is clearly holding a lot of prestige. So we expect that to happen. Structurally, we are at a point wherein the business goes to a new level in terms of size, volume. In any auto business, there are significant operating leverages and advantages to come through, which is something which will materialize when that happens. So our call is that this is going to happen over the next 2 years, but it will require some patience. But numbers will continue to be delivered, because anyone who understands the car business will realize that the kind of products that are coming through from Jaguar Land Rover stable are definitely very superior and competitive to what the current offerings are from the leaders, which is why we continue to like this business.
Okay, and within the mid-cap space itself, do you have any recommendations, Sandeep? Because, you know, now there are some pockets that have started to pick up. We've seen the entire logistics sector pick up quite a bit, names like Gati, All Cargo Global, etc. Any other themes that you've spotted and individual stocks that you're recommending?
I think in the mid-cap space, institutional brokers like ourselves have to restrict themselves to a certain size in terms of market cap, traded volumes, and also in terms of the broader track record of the management. Clearly, if you have those and you continue and you have to have these focus in mind, because the market goes through a downturn for some reason, whether it's the politics or some other event overseas, clearly the mid-cap sector can suffer disproportionately. In our view, therefore, with a focus on high quality mid-cap names, I think names which come to our mind would be the likes of Glenmark, which is a strong export story, and also Carborundum Universal, which will play on the build out in industrial growth, which is expected to happen in the second half. These are some of the names which can definitely do well.
All right, Sandeep, thanks so much for stopping by and speaking with us and enriching our viewers with all of those stocks and sectors. That's the word coming in from Kotak Equities. They believe that the market will be range bound ahead of elections, but one trigger or the other will take the markets to a new high, perhaps in the new year. So let's take a break.